All right, thanks. Appreciate that. Welcome, everyone. This is our leveraging the Fintech Bootcamp to stay ahead of Fintech Trends. We're going to discuss some Fintech trends as well as the contents of our bootcamp. So my name is Michael again. I'm here in Philadelphia as a technology expert, mostly operating as a sole proprietor. I have a bachelor's in computer engineering from Pennsylvania State and a master's in analytics from Brandeis University. I've also served as a fellow at a company called Uptake in Chicago, looking at cybersecurity, as well as at Drexel University, teaching things relating to cybersecurity. So other than that, my fintech background kind of starts with automated trading, Forex, in early 2012 and all the way through 2015. And then around 2017, I started mining Bitcoin and other cryptocurrencies. And then from there, I got into automated market making on crypto markets. And at a certain point, I started doing software development. Notably, I've done some contributions to a Coinbase listed project called Teller, which is an Oracle project. And I'm also a contributor to Apache Airflow, which is a workflow automation system. And as an instructor, I've actually been an instructor for about 4.5 years, and most of that time I was teaching Python programming. I'd like to introduce the other folks that I'm here with. And I guess should I say something now, or is there so we have Chris on the line here, who is representing Trilogy, and then we also have Stacy Clements here, who is from UPenn, University of Pennsylvania. Right. And what we're here to talk about is the Financial Technology Bootcamp. And I think I will hand it over to Chris to go through these slides.
Sure, yeah. So we'll just start off with like why fintech? And we can see that, fintech is definitely impacting all things financial services related. So here's just a few headlines that you're probably used to seeing at this point of how fintech is becoming more embedded in the financial space. Next slide, please. So what is fintech? When it first emerged, basically it referred to all things kind of back end, the management of financial databases and so forth. But today, that term is much more wide. It ranges from mobile check depositing to crowdfunding campaigns. And so next slide, please. In aggregate, I guess you could put fintech into these various buckets. You have wealth tech, the management of assets in a more automated way, a cheaper way. Insurance tech, where we're getting smarter about how to manage risk and to sell risk. Lending, peer-to-peer lending, as well as just smarter lending motivated by unorthodox forms of data. Property tech, real estate investment is becoming more and more digitalized. And of course, payment and a related aspect of blockchain. How do we send money from one place to another? It turns out there's a whole lot of innovation that can happen in this space to improve that process. This is kind of generally what fintech is. As far as job openings, it's very diverse. I sort of overheard a lot of talk about hiring for blockchain engineers right before we started this session. That's a very hot area right now. But there's also more traditional areas within fintech, like financial analysis and the analysis and estimation of risk, quantitative trading, someone who can build models to automatically trade. And more generalists, like building financial applications through traditional software engineering type roles. So those are kind of the job openings that are out there right now. But let me introduce kind of how we go about teaching practical skills so that you can kind of have the skills necessary to do those jobs. Overall, I'm part of a team of about a dozen or so experts who develop the curriculum, and each one of us developing has our own area of expertise. But in all development, the key idea is to narrow in on only the most important useful technologies that are being used at the best firms today. And so we research the most in-demand technology, and then we build a real-life workable application of that technology. And then we break that application into smaller, more digestible pieces, and then convert those pieces into individual activities and homework assignments for the learners to do. And the approach is to give learners smaller building blocks to work with. If you build and learn with these smaller pieces, then it's much easier to eventually build the entire thing yourself, which students will do, eventually building their own or even a better version of each application. And so this is an approach that works well to enable someone that may not have any exposure to that particular technology before going in to be able to be successful and proficient by themselves by the time the boot camp is over. Thanks. Next slide, please. And when we say applications, much of the core technology that we are currently teaching consists of what you see listed here. And Mike will give some more specific examples, but at a high level, we cover 3 technological topic areas. One is Python. Python is so big, we cover all you need to interact, deal with, and visualize data. And then the other is machine learning, meaning learning how to use current industry standard models that are out there and then deploy them to fintech specific applications like algo trading systems or how to use AWS to deploy your application. And then blockchain, which means not only demystifying what that technology actually is, but learning a language called Solidity so that you're capable of writing your own contracts on, say, the ETH chain. So these broad 3 tech topic areas, Python, machine learning, and blockchain, are what you see color-coded by week here. And here we see that the current skill sets taught broken down each week over the 24-week course. And I just also want to point out that at the end of each of these 3 sections, we have a 2-week project week period. Each week is an application that you learn to build, but the project weeks are your chance to really build the thing that you actually want, to combine the technology skills you learned thus far into the financial application that you want to build or sell into the market. And so project weeks involve a lot of support too, so there are extra resources when you need the technical support for that. And I won't go into detail, but if there are specific questions on some of these topics that you see listed here, Mike or I would be happy to answer during Q&A or just after. For now, I'm just going to turn it back over to Mike to discuss more about trends in fintech and supply some examples of these applications I was just mentioning.
Thanks, Chris. But yeah, talking about trends, so we have a sequence of slides that kind of highlights trends, and then we sort of tie it back to the activities we do in the class. So the first trend here, which has opened up a lot of opportunities, is kind of taking the back end of the financial system and turning it into APIs or other accessible tools that can be used by almost any individual. Previously, the financial system, the back end of it, sort of where orders were executed, making deposits and withdrawals from the bank, all of that was sort of centralized among the banks and the owners of the systems. But there was a sort of a trend in tech in general around sort of aggregation and kind of opening these things up. And so, in the first trend here, we sort of see how tools like Plaid and then other tools like Alpaca have kind of given us the ability to make applications that reach into the traditional financial system. So the example here that we have with Plaid is sort of the ability that you have with Plaid is to get access to somebody's bank information via a gateway. So you see in our little diagram, we sort of have on the far side, we have the app that we would build. And then in the center, sort of, if you look at kind of aggregating all the information from your different bank accounts, we have Plaid. The main highlight of this trend is that it kind of broke the barrier, or I guess the walled garden that was created by the incumbents. So Plaid, as well as a couple other technologies, made it so that anyone, not just a well-established, well-funded player, just your normal entrepreneurs, could kind of build these systems. So in class, what we end up doing with this is we actually use the data that we retrieve from Plaid and from some of the other tools in order to do some, mostly static analysis. But where we take it a step further is we actually use it to do forecasting. So what we do is we use a Monte Carlo method in order to take your historic information around your bank account and then forecast it forward into the future. So the Monte Carlo method combined with the ability to get this information, these are sort of some of the advanced techniques that we learn in this class, we practice in this class. So a similar trend, which is has popped up, is around automation and really just the idea of automating everything. One of the big areas of automation happens to be around trading. And I think that the rise of automation and the tooling around automation has given new players the ability to create new systems. And so what's happened is now almost anyone, again, can download or work with these systems in order to build automated trading strategies. And those strategies that can be made are up to the individual. So in this class, what we end up doing is we use the Alpaca API, and Alpaca is a company that essentially operates as a brokerage as well as a data provider for stock market and financial data. And so what we do with this is we're able to pull that information down, and we can use technical indicators to build trading strategies. And then using Python, we have the ability to back test, see how well those strategies will perform, as well as we have the ability to bring in real-time information and draw sort of how the strategy would be performing in real time. And for this activity and activities like it, we use a tool called CCXT. CCXT is a package specifically for interacting with the cryptocurrency exchanges and retrieve cryptocurrency price information. So the next trend is around decision making. A large part of the financial system has been predicated on sort of individual decision making and individual actions from people. Going forward, what we've started to see is more and more people and more companies are using automated systems to make decisions. Sort of the canonical example being the text message alert that you get that says that your account might be used for something fraudulent, right? So that's sort of done using machine learning. They've sort of trained the models on what it looks like to see a fraudulent transaction, and they're able to, in real time, detect it and take action. So I think, we're not really sort of saying the action part here, but when we talk about this trend of automating decisions, it is really about automating the actions that should be taken after the decision. So the machine learning techniques that have sort of, been widely adopted, an example is the credit card risk scoring and clustering. This is an unsupervised learning technique that can be applied in order to group, people into clusters of similar behavior or similar activity based on the data that we have available to them. So within this program, we actually look at these a specific case of credit card risk in the form of looking at loan history data. And we apply a few different techniques, including some supervised learning techniques like regression, in order to build models that can be used to automate the decision making or augment decision making, which practice a lot of times it's an augmentation and not a pure automation. So. Now, one other trend and assignment that we do in the class has to do with Amazon Web Services and cloud computing, and how machine learning has actually been made easier thanks to a lot of these cloud providers. An application that we look at in class is around robo-advisors. robo-advisors and sort of automated wealth managers. This whole class of technologies has been very new. In fact, the passive indexing and passive ETFs have been around for a while, but these new systems, these robo-advisors, they're actually doing a much more complicated activity. The example here that you see, we use Amazon Lex to actually build a tool that you can chat with in order to get information about your account and your account balance, a few other things. The robo-advisors around this machine learning, we've actually seen, one of the examples that I really like around robo-advising is the automated tax loss harvesting that I believe Wealthfront is doing. So robo-advisors initially were just sort of suggesting, okay, here, give me your risk information, and I will kind of construct a portfolio for you, and I will rebalance it. But the automated robo-advisors have actually become much more sophisticated to the point where they can do things that would be done by, your real accountant or a trained accountant. Specifically, the example of tax loss harvesting at Wealthfront. And then, yes, of course, my area of expertise is the cryptocurrencies and blockchain. And I do believe that this is a pretty disruptive part of fintech, what this provides. The main difference between the traditional financial system and this decentralized financial system that's being built with this blockchain technology is that the blockchains tend to be open and publicly available. They're really great for applications where you need many people coordinating together, and you need transparency, and also you need some level of assurance that when something happens, it actually happened. So blockchain itself is the underlying technology that's supporting cryptocurrencies like Bitcoin and Ethereum, but blockchain technologies also show up in private systems. For example, Hyperledger, which gets used a lot internally by companies to run their own blockchains. So in the class, what we look at is we actually do a really deep dive into this, including running Ethereum nodes. We look at running Ethereum nodes. But on a programming level, what we look at is building smart contracts. The simplest way I think you can imagine a smart contract is it's sort of a programmable money system. So you can, in a simple contract, you can essentially create an escrow. Right? So you can program a contract that says you need to have 3 of 5 people, approve the transaction before the transaction can happen. There's a popular smart contract on Ethereum called Gnosis Safes, and that's exactly what that does. It's a multi-signature safe. In the class, what we do is we actually create a whole sequence of contracts. We create our own tokens, and we learn how to transfer and move around tokens. We create our own non-fungible tokens, which represent things like deeds. And then the project that we end up doing, where students have 2 weeks to build something, they typically end up building both a front end and a back end to a blockchain-based application. So the platform that we have here, and actually is very similar to one of the projects that student in our previous cohorts did, what is around real estate, managing all of the transactions around real estate. Blockchain is an excellent use case for that because these deeds and these records are already public for the most part. And there is actually a lot of problems around the provenance of that data, the integrity of that data, who owns the property, when was it last transferred, making sure someone has the rights to transfer a property and not just selling a fake deed or something like that. And then, of course, there's all the money management. So there's an escrow process, there's proof of funds, there's all sorts of money-related things that need to happen in this. So in the project here, students have demonstrated that they learned this skill, this blockchain engineering skill, and they built the smart contracts on the back, which is what we would consider the back end. And those smart contracts manage the ability to make your payments, the ability to transfer titles, transfer ownership. And then on the front end, it sort of functions kind of like an Airbnb or a Craigslist, where you can log in and browse, and you can actually interact with things that you have. So just to show you like some of the stuff that we do here, there's sort of funds that are moving around. Everything is kind of based on Ethereum. We do look at both Bitcoin and Ethereum in the class. We focus primarily on Ethereum because it's the largest, and also it is where all of the decentralized finance is happening. So Chris, I'll hand it back to you if you want to go through some of the fintech and venture funding slides here.
Yeah, sure. So just given that this is a meeting about venture capital, I thought it would be good that we touch on fintech and venture capital specifically. And I wanted to bring your attention to this graph here, showing the amount of billions of dollars in the US that's flowing into fintech right now, especially compared to previous trends. And so there was, you can see a long-term trajectory of increased investment in fintech firms by venture capitalists over the years. But especially within the last year, we've experienced an enormous influx of capital, VC capital into fintech firms. Source for this, by the way, is Crunchbase. And next slide. So at this point, I mean, in 2010, 1 in every $10 was going into fintech from VC funds. Now it's about a fifth goes into fintech, a fifth of VC funding going to fintech. And the market value of those startups, some of them no longer exactly startups, is about $1.1 trillion. So that's about 10% of the global banking and payments industry, and about double from where it was about 3 years ago. And fintech, it's not just in the United States, especially in China. There are some amazing innovations that are happening right now, and interesting regulation that's being associated with that. But in Europe, Latin America, and broader Asia, fintech is really something that's global. Next slide, please. So as far as investment in fintech, though, it's not just limited to venture capital. So there are a lot of acquirers or investors in fintech companies that aren't venture capital based. These are more what I would say strategic acquirers. And they include credit card giants like Visa. Visa needs to invest in various different fintech firms because they need to hedge against the risk of online payments taking a share of their credit card business. So they're very active in this space. Big banks, JP Morgan, Goldman Sachs, JP Morgan especially, and other similar types of banks, they have all these branches that are very expensive to run. And so they're constantly looking to reduce those costs by expanding their digital offerings. And I mean, it's just the way things are going too. It's more convenient for customers to deal with stuff on their cell phone than to go down the street and talk with the teller to deal with their banking business. But other acquirers too, and if you don't mind, I just want to go back and mention Stripe, Square, these other fintech firms, the sort of bigger fish in the sea, they are actually making acquisitions for fintech startups as well. Stripe, the way it grows now these days, more or less is by acquiring smaller firms. And Square is spreading out its business by going deeper into the financial regulatory system, by acquiring a banking license, which is a very kind of onerous thing to get in the United States. And of course, you've got the big tech firms that are starting to, well, have been entering the fintech space over the last few years. Regarding the big tech firms, they have had a light touch approach so far in the fintech space. They tend to want to get the juiciest piece of the business and then leave the rest of the financial services business to more experienced providers who are accepting or used to less significant profit margins. So Google, for example, they offer bank accounts now. The bank accounts are not held by Google. They're just sort of the front-end provider. And I think it's Stanford Credit Union and another one that actually runs the bank accounts managed by Google. Similarly, Apple co-managed the credit card with Goldman Sachs, a more traditional bank / investment bank, and a Chinese example, Ant Financial. They started, they have a huge customer base from B2B transactions and just online payments. They started lending, offering credit services to their customers, but they don't actually hold the loans for the most part. For the most part, they sell those loans on to traditional big state-owned banks, and that's just because it's more profitable for them. And it's becoming a regulatory issue right now for them, but this is kind of the way tech, big tech especially, acts in fintech right now. And of course, Amazon, I don't know if you've seen the news, but they're hiring now aggressively for blockchain experts. Okay, so I hope we've motivated some excitement for fintech, the business prospects for it. And so next question may be like, how do I get into this? And the answer is that there's many different ways. There's not really one track, and that's kind of the fun thing about it. You could be involved in product, you could be involved in selling product, you could do the analysis, dealing with Python and pandas, or the more SQL and data engineering aspects of it, or you could even start up your own fintech firm. And regardless though, all of these require varying degrees of technical proficiency. So that's something that you might want to consider. And I also just want to emphasize that fintech is not, it's not just a job role only for fintech pure play type startups. Like that's all they do. You can find fintech jobs at financial institutions, which are increasingly encouraged to find how to better incorporate technology, and the technology institutions themselves, the big tech and the medium tech. So this is kind of the idea behind the program, once again, is that, you know, we need to teach the finance fundamentals, and that takes place in terms of all the tech we teach. It's in the context of what finance do you need to know to succeed. But the main sort of base of the pyramid beyond that is Python and programming skills. So we start from really square one, you know, no programming skills required going in, to teaching students to be fully fledged proficient in Python as well as the blockchain associated programming languages. And it really just builds up from there. And at this point, I will turn it over to Stacy to talk more about the boot camps and enrollment aspects at Penn.
Thanks, Chris. Hopefully by now we've enticed you to take a look at the Fintech Bootcamp. We've made a good argument that it's a great way for you to learn the skills that you need to enter this industry. But I just want to point out, we currently have 7 Penn Bootcamps, and they're listed here on the screen for you. I'm just going to run you through kind of how a bootcamp works. We've been offering bootcamps at Penn since January of 2018. And like if you want to advance, it's just an intensive way to learn a new tech skill. It's a great way if you want to kind of launch yourself in a new career or advance in your current career. So the boot camps last for 6 months. We do have one full-time coding boot camp, but the others are all 6-month programs. You attend 2 nights a week and on a Saturday. So they're geared for a working professional. Since COVID, we have been offering all our boot camps online. So you just log in live online. You do need to be on your computer live with your classmates for 2 nights a week and Saturdays. Also, I'd like to point out the support that you get with our boot camp. So in addition to the instructional team, Mike, we have TAs with each of the classes. You also get online support. So everyone has access to a private tutoring session each week to support you through the boot camp. And then there's also 24/7 help to help you with your assignments or to ask questions. Not all of that is live, but you can get support for whenever you're working on your projects. And then I have to mention the support of your classmates. Each of our boot camps they have 3 projects that you need to complete as part of the program. And those are group projects, which is a great way to learn from your peers get those skills that you're going to need in industry as you work in a group, just like you would in your corporate environment. And then once you finish the boot camp, we have career services, which we just finished talking about the industries and how you can get your start. We're going to help you get your resume ready for the industry that you're interested in going into. Take a look at your LinkedIn page to make sure that it has those important keywords. And we also, as you can see on the screen, have some other services. We do some interview prep with you because lots of times those technical interviews are very different if you're coming from a non-technical industry. It's something you're not prepared for. So it's nice to have practiced one of those before you're surprised with maybe having to live code on a whiteboard like so. So as I mentioned, here are our boot camps, 7 different topics. We have 8 different kinds. We've got the start dates here, the length, the tuition. We do start a boot camp every 3 months. So each of these boot camps launches every 3 months, and it is an intense experience. So we really ask that you kind of look at your life's calendar and figure out when is the best time for you to pursue this learning opportunity. If one of these dates don't work for you, there should be another one starting the next 3 or 4 months. So I'd like to just kind of open it up for questions now. I don't know if there's any questions in the room or questions online. You can ask Mike or Chris or myself. They're happy to kind of talk to you about some more fintech trends, debate some ideas, whatever you'd like.
Yeah, no questions online. Thank you guys so much. Were there any questions in the room? Oh, yeah. Hi. So
I had a quick question. That are these classes online or are they in person now?
We're still offering all our classes online, but it's
online.
It's live online, so you need to be actively engaged at your computer during those times.
Okay.
Any questions?
So thank you so much for your talk. It is really learning about this. Like emerging right now, and I experienced it sometimes differently with it. But I don't know. And I recently saw that they have to show on it as like an exhibition. But I just wanted to ask you kind of what's your take on that. And I was just looking at it recently, and I know that they have like kind of lessons about crypto and blockchain, and yeah, I just wanted to ask that question.
Yeah, so general commentary on Venmo offering crypto, PayPal also offering crypto. Well, you know, my first general comment is, you know, these are companies that are motivated by profit. So the only reason you're being offered it is because it's profitable for the company, right? So that's the first thing. My second comment is I think it's great. Personally, I use Bitcoin like a savings account, right? So the money, I'm not just saving and putting it away, you know. Doesn't really make sense. You know, you're going to lose money in the bank because they're going to charge you some fee. So, you know, put it in Bitcoin and hey, let's risk it and see what happens, right? In general, it's actually worked out pretty well. And, you know, occasionally if I want to take a vacation, I'll sell some, you know, and it's not because it's a savings account, holding it for so long, it really works that way. So, so in Venmo, you know, I imagine that, you know, my friends are doing something very similar, right? And they've been using Coinbase, they've been using Robinhood, they've been using, yeah, I think that's great. It's kind of antithetical, unfortunately, to the crypto space. So I personally use self-custody, so I hold the cryptocurrency myself. It's not held through like a Coinbase or Venmo. But you know, the principal side of me is like, oh, it's bad because it's centralized and it's antithetical to crypto. But on the other side, it's just great because more people are getting cryptocurrency. And if you know anything about, you know, sort of these technologies, there's this concept of network effects. And so for every new person that joins, it increases the utility for everyone who's already joined. So in that sense, the more that we can get people to start participating in crypto, the better. There are many more use cases than just holding your Bitcoin or holding your Ethereum, though. So I think buying the crypto via PayPal or Venmo, or even Robinhood, is mostly for those companies to make money. So of course they're going to offer education. Of course they're going to give you incentives. But yeah, you just have to remember that like Coinbase is a great example, which is they offer everything, or mostly everything. but they're really not. It's sort of like Facebook and Twitter with their liability around false news. You know, Coinbase, you know, they're a bank. They're offering interest on deposits, but they're not a bank, right? And you know, they're not really. There's no real regulation on what they can say to you around these cryptocurrencies. So you know, they kind of show you some fancy videos and then put some colors on the screen. And the next thing you know, you're buying some coin that you've never heard about because your Uber driver said that it was going to go to the moon. So like, I'm a little, I like that this is happening. I like that this is happening, but I'm just not sure. I'm not sure that I look at it as like, hey, everyone, this is good for the consumer, right? Unfortunately, I don't think it's going to be good for the consumer. And I think, yeah, we might end up with bringing these CEOs into court and asking them like, why did you sell your customers, all this crypto and then it went to zero, and who's liable there? Yeah.
Hello, thanks for talking to us today. I didn't get the beginning part of the discussion. I'm a journalist and I cover financial technology and retail, and I love the embedded financial services. And one of the things I've been hearing about is that in the industries, a lot of companies are disaggregating the plumbing of banking and turning that into a business model. So yes. This idea of like banking as a service,
right?
Doing embedded finance, which is putting financial services tools into non-financial service use cases, or also embedded fintech, which is taking the technology stack and putting it into maybe a legacy bank or something. I'm just curious to know what you think about that banking as a service as a business line and where it might be moving, and whether you think that I think that space is getting very saturated now. So I'm curious to what you think about the evolution of that.
Yeah, that has been happening for a while. I remember the first instance that I saw of something like banking as a service was the debit cards that you could get. You could go to a bank and you could say, hey, we want to offer our community or our club or like people who are our customers the opportunity to get a card, right? So that's like, oh yeah, sure, we'll issue cards to you, your brand, that'll be great. The same thing has happened with the trading applications like Robinhood. So on the back end of these, a lot of them are actually built on Alpaca, which is exactly what you're describing, which is sort of a back end banking as a service. They're brokerage, and they're a data provider. But you could build an app, a front end, like an iPhone application that is a brokerage, but everything is executed through Alpaca. So all the trades are executed through Alpaca. So there are most of the Robinhood competitors are doing that. They're not actually like brokers, but they are on the back end using another broker like Alpaca in order to clear their customers' trades and manage their accounts. Even like Square, who offers the Cash App, and you get a routing number and an account number with them. On the back end, it's like some bank or something, which I actually think they might have bought that bank, but. So I just think you'll continue to see that, and the reason that you're going to continue to see that is because it's a model that works really well. Think about running a brokerage and like doing all the front end stuff of building an app and supporting the app, customer service for all your retail customers, versus running a back end brokerage. You only deal with the businesses that are building on your system, so it's fewer customers to deal with. And then you don't have nearly as much because you don't have to manage the front end. You're just basically offering an interface on the back end. So I think the model will work. I think that companies that are doing this already will start offering their back end as a service to people, like an API. I think companies that don't do that will probably get less use. Companies that do that will get used more. And it's just in general, it's part of this trend where financial services and the tools around financial services are being open to more people, right? Like previously, if you wanted to build a brokerage app like Robinhood, you would have to go get like a license and all this sorts of things. My understanding is now you can go to some of these companies and you just need to basically be vetted by their compliance before they're willing to sign an agreement and use their service. And there are very similar things in crypto. It's Silvergate Bank, which will operate as the back end for companies that are doing crypto payments. They want to have accounts for their customers, well, they'll create Silvergate accounts. but on the front end, they see, you know, whatever the app is. You know, it's not Venmo, but like Venmo on the back end is using Silvergate or something like that. So yeah, I mean, the trend's going to continue, and what will happen is that I think a lot of the up and coming companies will be that, or they will be using those services. Because, you know, the way that innovation is going to go is now that once the tool becomes available, it's going to get adopted, and people are going to find new and exciting things to do with it that the other incumbents didn't think to do with it, right? That's the beauty of producing something like a platform as opposed to producing something like a specific application. When they build a platform, they're essentially, you know, propping people up. So in general, it's incredibly good for the industry. It's incredibly good for the industry because you now have less friction to create, right? You can create things that destroy other things, and you know that's in general how it looks.
Follow up. I think you know, a lot of banks are offering their backend services to fintech companies. But do you think that the legacy financial services companies have something to worry? Because I mean, if usually small banks that are kind of offering their backend, but yeah, I mean, they all should be worried because the traditional, you know, this is a strong opinion I have. The traditional financial system is, again, what I said about, you know, Venmo up in crypto, it's set up to just extract wealth and take rent. So these newer systems, they can create the same quality of service, serve the same need, and do it with like 1/100th of the resources, because they're starting fresh and they haven't bought all these buildings that they have to maintain or whatever, right? So, you know, I do think that those businesses need to worry. I think the managerial elite that run these banks and that operate as middle management really need to worry. They really need to be concerned. And yeah, I mean, they're in trouble. I mean, I don't know. I'm never going to go to a bank to get a loan because I can do it without going to the bank, right? And that's available to everyone now through, you know, platforms like Ethereum. The only barrier is people don't know how to do it. Just like people didn't used to know how to go on and get their email, right? Or set up an email account, right? But we all figured that out. And now we all do CAPTCHAs like we're pros, and we can like recover our password if we lost it, right? Thank you.
Yeah.